We need to talk about President Trump's wild claims about the 20 trillion he says will be invested into the U.S. economy by the end of 2025. It sounds massive and bullish, but the internet has turned it into pure hype. The key word Trump used was invested, not printed, not injected like stimulus. He's talking about total capital coming into the U.S., foreign direct investment, companies reshoring production, tariff-driven supply chain returns, private sector spending on factories, AI, chips, pharma plants, everything rolled into one big marketing number. Is 20 trillion in investment a big deal? Absolutely. It will create millions of jobs and help fix the current jobs crisis over the next few months. Is this happening because of tariffs? Debatable. Is it money printer go burr? No, it's not the Fed printing cash. It's corporate and government-level capital flowing in. Trump's recent tours of Asia and Europe brought major deals. Switzerland cutting tariffs for 200 billion of U.S. investment, Japan committing 550 billion for AI and manufacturing, Korea pledging billions, plus deals with Malaysia, Cambodia, Thailand, Vietnam, and Saudi Arabia increasing their U.S. investments up to $1 trillion. This is real capital that strengthens supply chains and boosts American manufacturing. Combine that with incoming Fed liquidity, and you get a strong bullish setup beneath the market. The 20 trillion number is a distraction. The real story is the liquidity wave forming quietly behind the scenes. Markets are heating up. GDP projections are strong, and risk assets look primed for a boost. Investors are lowering expectations for a December rate cut, but Fed Governor Christopher Waller says a cut is likely due to labor market weakness. With the Fed divided and Trump applying pressure, there's still a strong chance of another cut. Add to that the end of quantitative tightening on December 1st, and sentiment is set to improve steadily over the next few months. Not instantly, but gradually. Then there are Trump's $2,000 tariff, dividend checks coming in 2026, potentially costing $200 or $600 buy depending on structure. This isn't printed money. It's tariff revenue being returned to Americans, mostly low and middle income. That is major cash entering the economy, right before midterms and right before the typical crypto end-of-year rallies. A new Fed chair will likely be installed in mid-2025, someone more aligned with Trump's agenda and more aggressive with rate cuts and liquidity. Markets could front-run this. Meanwhile, the Treasury General account is already releasing tens of billions back into the system. All these pieces, investment deals, trade deals, stimulus checks, lower rates, a dovish future, Fed point toward a strong liquidity wave into 2025, 2026. It won't be instant rocket fuel. These are massive structural moves that unfold slowly. Data centers, plants, and energy projects take time, but job growth and capital flow begin much earlier.